Hey everybody, today's June 22nd, and today I'm going to talk about the price of Bitcoin. So in the last couple hours, Bitcoin basically crashed below our $30,000 support level, which is not only the Fibonacci level support level, but also the previous support level that we had in our previous correction back in June. And this was a major level that I said I wanted us to hold, because if we close up below 30,000, I said that we were going to continue down to 20,000. So the question is Bitcoin going to enter a bear market? We just crashed. We also had a nice recovery, but the question is this just a temporary bounce, and will Bitcoin continue down lower, or is this going to be the bottom, and will Bitcoin continue up higher? And before we answer this question, please read this disclaimer, and you can pause this video as you read it. Okay, so over the past couple weeks, of course, we've seen Bitcoin draw down over 50%, bounce within this range, right? Finding support above our Fibonacci support level, which is 30,000, right? And we said this is very important because we found support back in our first correction of the year, which is January. And we also talked about how we are just on a macro level, we are making slightly higher lows, right? Over here to over here. This very slightly. So we really want to see us hold above this level. Otherwise, if we come down lower, we're going to start to make lower lows instead of higher lows, and that's going to be a bearish trend, right? So we're barely hanging on right now. As you can see, we technically are higher than the close back in January of just above support level here. We're still above support level. We haven't closed, but it's really important that in a couple hours when we have the daily close, we want to close above this Fibonacci line around 30,000, right? Now, of course, we had a lot of buyer step in, which is really good, making me more optimistic and bullish. And we came down pretty hard a couple hours ago, but buyers came in, stepped in, and pushed the price higher, right? So this overall is a good sign. So the question is, what's next? And I think that right now, I do think that Fibonacci level is going to hold as strong support as it usually has. You know, these Fibonacci support resistance levels are going to give us nice levels reliable levels to look at as we try to navigate this difficult trading environment, right? So the question is, are we going to continue sideways, or is this going to plunge into a bear market, right? So the answer to that question is nobody knows for certain what's going to happen. In my opinion, I do think this is short-term volatility. A lot of what's causing this is what's happening in China. They're starting to crack down on miners, right? And of course, we're seeing the hash rate go down. And when the hash rate goes down, the price tends to follow, right? We want to see Bitcoin be a secure network. We want as many miners as possible running the network, processing transactions, and keeping it secure, right? So when the hash rate goes down, and also miners, when they're shutting down, they're going to sell their Bitcoins, right? So that's also putting downward pressure on the price of Bitcoin. But in my opinion, this is only a temporary. This is only temporary pain. I do think in the long term, this is good for Bitcoin, because what's happening is in the last couple of months, and really the last couple of years, China has really been where most of the Bitcoin hash rate has been concentrated in, right? They say like 60% of all the mining power is in China. So there's been like speculation that one day that might lead to collusion among miners trying to attack or control the network, right? So the fact that China is actually banning miners, that miners going to be mining power, the hash rate is going to be distributed more evenly and more, I guess, more decentralized around the globe. So this is actually a good thing. It's going to be harder for miners to collude if they're all in disparate places around the world. And also this is going to be great for American miners, right? Because now American miners are going to have more of the hash rate to share and dig into. So we're starting to see a lot of actually, you look at the mining stocks like Riot and Marathon, you see how they're actually making higher lows. So on a technical level, the mining stocks are actually performing better, at least on a technical level, right? Percentage-wise, they're still down a lot more, but on a technical level, it looks a lot stronger, because there is speculation that now that a lot of the mining power is gone from China, it's going to go to other places around the world, including North America, right? So a lot of these American and Canadian miners are going to get more of the share and more profits, right? Because there's going to be less competition from China. So this ultimately, in the long term, is a good thing, not only for the mining stocks, but also for just the Bitcoin network in general, for blockchain, right? Now that everything it's a lot more decentralized. So I think that this short-term pullback, this crash, is just a short-term volatility that eventually the buyers are going to come in and they're going to see that because overall there's nothing really fundamentally has changed about Bitcoin. Bitcoin still works, right? It's still great, and there's nothing has really changed fundamentally about Bitcoin, the code, or anything like that. It's just that we're having some short-term volatility due to some of the mining hash rate being distributed or into different places instead of it being centralized in one country. So this to me is just short-term volatility. Personally, I did buy more this morning. I actually bought a lot of well, I don't want to give away what I bought, but I bought some more coins and some more mining stocks. I added to my Riot Mirror positions. Not going to get too specific, but I did get pretty lucky. I actually bought in near the bottom this morning. I woke up and I saw it crash below 30,000, and I was just like, hey, this is a once every few months, maybe even few years crash, you know, more than 50% down from the top. Let's see how far we've fallen. So from the peak, we're down like 55%. So and I'll explain later in this video why this could be a good opportunity. Of course, let me just say very quickly that I'm not a financial advisor. This is not financial advice. This is just entertainment. I'm entertaining you with my own positions, but that doesn't mean you should copy my own positions, right? I could end up being wrong. This could end up going lower, and I could lose a lot of money. But that's for your entertainment, right? I'm not saying you should copy my trades or that I'm correct. Of course, I did buy some. I said I try to be transparent, right? I thought that we could hold this Fibonacci support level over here, so I ended up buying over here. Of course, that ended up being not the best decision, so ended up crashing down. So I lost a lot of money down here, but I've been buying these dips, right? Now that doesn't mean you should copy me, right? Because just like we failed to hold this Fibonacci support level, it's possible we can fail to hold this Fibonacci level, right? But I do believe, and I'll go over this later in this video when we look at the monthly chart, I do believe that we will hold 30,000, okay? So that's why I'm buying, but just because I buy doesn't mean you should follow me and copy my trades. Always make your own decision because you are responsible for your own financial decisions, okay? So let's look at the oscillators. Oscillators was looking good, but unfortunately, of course, the crash. Now we're crossing negatively, but again, like I said, we want to see the buyers come in and push the oscillators higher to positive territory, right? And we're seeing the oscillators trend down over the last couple months. And when we see the oscillators coming down, this is MACD, RSI. When we see the oscillators trending down, while the price of Bitcoin is rising. Of course, that's a bearish divergence. That's why we crashed so hard, right? Now, we had a RSI cross into oversold territory, which is great. This is also where I bought some. Now we're coming close, but I do think we're going to hold this level. And I think we're going to find a strong base support and push up higher. So, in my opinion, unless there's like new fundamental, like if something drastically bad fundamentally or just news-wise, I don't know, maybe America bans Bitcoin or something, like I do think that we're going to hold 30,000 unless there's like really bad news that comes in out of nowhere. But so far, I think that what we're seeing is just a reaction, an echo of what's happening in China. But eventually that FUD from China is going to be less and less impactful, especially now that they're basically cracking down on mining, but also holding and trading cryptocurrencies. There's going to be less and less FUD because over the last several years, and I've been in Bitcoin since 2013, and I remember the first time there was rumors about China banning Bitcoin in December of 2013, and that's when we had our first flash crash, which led into the bear market. So like I'm very familiar and experienced trading with China FUD, right? I've been experiencing it for like 8 years now. So you know, I'm not worried about it or anything like that. And it's just something that going forward, it's optimistic now because there's going to be less China FUD because China is going to have big cryptocurrencies are going to be less impactful because China is basically banning them all. So this is ultimately a good thing. Short-term pain, of course, but long-term, I'm very optimistic on Bitcoin and other cryptocurrencies going forward. So that's the daily chart. What we want to see is of course, us trade back within this range, right? So let's look at, we can sort of build somewhere around 40,000. This is our range high, right? And our range low could be somewhere in the, 30 to 30,000. I don't like to use wicks, but let's just say, let's just see if we can find somewhere around 35, right? So somewhere around 34, 35, let's just say over here. We want to see Bitcoin get back within this range and trade, hold this range and then push up higher, maybe come down, retest, and then try to break through our next major resistance level, which is Fibonacci. Actually, scratch that. That's our second major resistance level. Of course, we have the 200-day simple moving average, which is really strong resistance level because we not only broke up below it, but we've been below it for basically a month now, you know. And I said how it's really important that we stay above the 200-day on the daily chart, right? Because in our previous bull cycle, we were always above the 200-day on the daily chart, right? We were always above this blue line. We wicked below it in the middle of 2016, in August 2016, but we didn't close below it. We always stayed above it. So the fact that we're below the blue line for so long, that's not a good thing, right? The longer we stay below the blue line, the 200-day simple moving average, the more likely we are to plunge into a bear market. So the fact that there's buyers stepping in now gives me hope that we can continue up higher. So, but we want to see us overtake the blue line, the 200-day simple moving average, and then attack the next major resistance level, which is this Fibonacci support level around 47,000. So another thing is, of course, the death cross that we talked about in the last video. It's crossed finally, and crossed a couple of days ago, but haven't made a video since. But yeah, so it's since crossed since I made our last video about the death cross, impending death cross, and it's crossed, and of course we had a nice plunge. But a death cross isn't the end of the world, right? The fact that we're seeing buyers come in is a good thing. So we push up higher. We want to see us push above, and that's going to move the moving averages into a more bullish posture, right? So let's go to something that I want to talk about, or I was referencing in the beginning of this video, which is the macro, right? So I said this in many videos in the past, how we're seeing a pattern that's very similar to what we saw in 2013. And I'll go to my Twitter page here. I just sent this tweet out. Basically says that Bitcoin is following a similar path as 2013 bull run. 6 consecutive green monthly candles followed by 2 red monthly candles and a green monthly candle that wicked below the previous 2 red candles. If Bitcoin closes June green, then we should see Bitcoin rise higher, right? So we're following a similar pattern, right? 6 consecutive green candles, 2 red candles, and of course a green candle that wicked below the previous 2 red candles, which was basically a bear trap. It scared a lot of people, and weak hands sold, and then we saw this incredible rise in the second half of 2013, right? So right now we're seeing something very similar. 6 consecutive green candles followed by 2 red candles. Of course, we're still in the month of June, which is this candle, and we have yet to close this candle. But if Bitcoin price can rise for the remainder of the month, we will close this candle green, and it's going to look very similar to this pattern, and we should see some follow through as well, pushing up. And you know, that's another reason why I think that we saw a crash, is that we went up too quickly, right? We went up way too quickly, and I think that it's good that we're seeing a correction like this. And this correction was worse. This was 80% correction. What we're seeing is a 55% correction. So this is a lot better, but at the same time, it looks very similar. So if we can close above, close this monthly candle, June, close green, then I think that the probability of us going higher is a lot higher than us going lower. So, and of course, looking at the Fear and Greed Index, 10, we're still at very low, historically low levels, right? And the last time we were this low was the pandemic, March, right? This level stayed, we were down this level for a while. Same thing here. And this was obviously, in hindsight, a good time to buy. So, you know, am I telling you to buy now? Personally, I'm buying, but of course, you have to make your own decision, right? I'm not a financial advisor. And so right now, it seems like the buyers are coming in and holding up support level. And so as long as we have buyers coming in and defending 30,000, right? It's okay. We basically just wick below. But as long as we close above 30,000, I believe there's still hope that Bitcoin can continue this move higher and that we can continue the bull run a lot higher, right? Because if we look back in retrospect, we wicked below in January, but you know, if Bitcoin does continue higher, we're going to look back in retrospect and say, hey, these wicks below the Fibonacci, these were bear traps that scared a lot of people, right? Scared the weak hands, but the smart money like us, right? We come in and we buy these dips and we shake out those weak hands and we take supply off the market from the weak hands and we push the price higher, right? And those weak hands will buy back at a higher price and push the price even higher. So I do think Bitcoin 100,000 and beyond is still possible by the end of this year. But in the short term, short to medium term, I want to see us defend 30,000. If we can't defend 30,000, then of course, like I said in my previous videos, we will plunge to 20,000 for sure. Like this is almost for certain, right? Because there's really no more support. Maybe around like 24, 25,000, but I really don't see that much. If we can't, we've been holding this support for so long, and we had support held back in January. If we don't hold this level, we're coming down to 20,000. So, but I'm still hopeful, and I'm being transparent and telling you guys that I've been buying these dips down to 30,000. Of course, again, let me just reiterate, don't copy my trades, make your own financial decisions, but I just want to be transparent with you. You know, I don't want to be one of those guys who just say, well, this could go up or this could go down and whatever. You know, no, I am putting my money where my mouth is, right? I am buying these dips. No matter how scary it feels to buy these dips, I'm still buying them. So for now, I'm giving benefit of the doubt to the bulls because, like I said, still technically higher lows, even if it's very minuscule, right? We are still, unless we break 30,000, we are still technically in a bullish macro uptrend, right? I mean, just look at this. Does this look like a bear market to you, right? Does this look bearish to you, right? No, macro-wise, we are still bullish. So we have to give the benefit of the doubt to the bulls until proven otherwise, until they break below 30,000. But for now, I'm hopeful, and I believe that we can hold above 30,000. But of course, we're going to have to see what happens in the next video as this price action develops, and I'll definitely update you guys, and we'll see what happens going forward. And of course, depending on what happens, I might change my strategies a little bit to move with the markets. But for now, I am optimistic. I am bullish, especially since we had this epic rally over the last couple hours, right? So with buyers coming in, I am hopeful that this China news is only temporary, and for a long term, it's going to be a positive benefit to the cryptocurrency community going forward. And yeah, again, update you guys as this moves, as this develops, and hopefully we can get back into this range and push up higher and defend 30,000. Now, if you found this video helpful, please like this video, leave a comment below, and subscribe for updates. Thank you guys for supporting me, for watching my videos, and have a great day.